Let's have a conversation with Mr. Venkatraman, the Executive Director at Federal Bank. He will also help us understand what these numbers are going to look like. We've got Mr. Venkatraman now on the line. Sir, welcome to this conversation. Strong quarter for you this Q3. What exactly do you think has contributed to this immensely strong growth for Federal Bank?
As you mentioned, it's been a very strong quarter for the bank with highest ever NII, highest ever fee income, and highest ever operating profit. In terms of what has worked well for us is it's a continuation of the focus on execution, and as long as we are working towards what we set out in the strategy in February last year. So the execution focus is what has helped us in terms of strong performance this quarter. If I have to call out a few things specifically, it would be the continued focus on the liability mix, especially CASA. You would have noticed that our CASA growth has been very impressive, both QOQ and YOY, and the CASA ratio is also amongst the best in the industry. So the liability mix focus is one key call out. Second is the focus on medium yielding assets. To make sure that we are focused on profitable growth and not just growth for the sake of it. So the focus on expanding the medium yielding segment on the advances and ensuring that it is relatively more profitable. That's the second one. And third one, if I have to call out, it would be, whilst I said that the fee income has been the record ever, the discipline on cost and credit quality. I think Federal Bank is known for ensuring that the credit quality is pristine. We continue to make sure that we have a strong hold on the asset quality. So a combination of these factors has helped us deliver a strong quarter. And as always, it's not just one, it's a combination of several things.
Obviously that CASA improvement has helped your net interest margin 12 basis points higher on a quarter-on-quarter basis. But having said that, the yield on advances has dropped. You said you want to focus on the medium yielding assets to grow. How long do you think this margin expansion is going to be sustainable, considering the fact that the recent rate cut will also flow in? The rate cut happened in December. In the January-March quarter, you will have that rate cut impact also show up.
The rate cut which happened in December, we will see 2/3 impact of that come through in this quarter. And having said that, sustainability of margin again is, we are quite mindful of the fact that we need to ensure that the liability growth mix changes and the focus on CASA growth remains. So our endeavor is to ensure that the NIM stays around this level for Q4, so that we take measures, offsetting measures for the impact of the rate cut as well. Now, sustaining that going forward is obviously something which is a factor of several external factors as well. We are assuming no further rate cuts. Liquidity remains good, and also the growth factor is another thing. We all know the current uncertainty on the geopolitical side. We are hoping that the Indian economy continues to grow, be stable, and we are quite mindful of the fact that there is opportunity externally for us to continue the journey of growth. And if that happens, we should see the margins hold up, and as the mix changes, we should start seeing over a medium term the margins improve as well.
Talking about growth, then what exactly are your growth targets looking like on the advances and deposit side? You've got that fundraise from Blackstone, which is coming likely to come into play. 25% is going to come in the March quarter. But how does that set you up for growth this year and the next?
Yeah. See, the fundraise first tranche is expected in this quarter. We are waiting for the regulators' approval. CCI approval is in place. So with the assumption that it will come in this quarter, in terms of the growth, you would have seen that for Q3, the advances growth was around 4.5%. So growth is always looked at from a momentum perspective. And our endeavor for the next year is to grow at around mid-teens, and we'll take it from there. It depends on what external opportunity presents, and if it is favorable, we can always press the pedal. But at this stage, we are looking at a mid-teens growth.
In terms of your capital adequacy, what kind of a boost are you expecting from this capital raise that you're doing? Depending, of course, on when the RBI approval comes in. But how much does your capital adequacy get upgraded by?
At this stage, with the 1/4, if it comes in this quarter, there will be approximately 50 bips addition to the CRAR. And the 3/4 is expected after 18 months, so which will be FY28. So yeah, there will be an accretion to capital at that stage, but we should also be mindful of the fact that over this period, there will be capital consumption as we grow also.
This is a question that has been on my mind since this deal was announced. Firstly, Federal Bank was never known to have a lack of capital, so that was not the issue. So was it essential to get a partner on board? And secondly, a private equity partner. Was that essential to get a private equity partner on board? Because some of the other banks in the system have not had the best experience by getting a private equity player on board.
No, see, we were. As per our plan, we were anyway looking for a capital raise in FY27, and in the journey of ensuring that we find the right partner, it's always good to have a long-term strategic partner, and a marquee name like Blackstone, is something which we feel is the right thing, and they are not coming in for the short term. They are looking at a medium 5 to 7 year horizon. And with a name like Blackstone and more importantly, it's a minority stake. They're taking 9.99%. And what it means is it brings stability to the shareholding base. It also sends a signal about the confidence which they have on the strategy and execution of Federal Bank, which we have set out to do. So it sends the right signal. It reinforces our shareholding. It ensures stability to the shareholding, and what better name than one of the largest PE funds in the world. I don't want to generalize and say that all PE firms behave in a particular way, and Blackstone has demonstrated that they have been a stable long-term investor in many of their investments in India. So we are very confident that this will play out quite well and ensure enhancing shareholder value in the years to come.
What about the Reserve Bank approval in this situation? Because obviously that's the last step in the entire fundraising process. When do you think that is likely to come in?
Yeah, the EGM happened on 19th of November, post which the application was sent to RBI. Usually they take about 90 days. So, and of course, it's Blackstone who's filed the application and are following up. And we believe that within this 90 days, so probably by end of Feb, we should get the approval. But you never know. If there are any further clarifications which they seek, that will be provided by Blackstone. But we are reasonably confident that things are on track and we should get it this quarter.
All right, sir, thank you so much for taking us through those details about Federal Bank's Q3 results and what the future course looks like. So that was V. Venkataraman, the CFO of Federal Bank.